Hey there, welcome to the channel. So today I want to talk about the real truth behind Bitcoin. So there's a lot of talk out there right now because we've had this crypto implosion. And now I'm starting to hear out there how it's almost as if it's a conspiracy, how the cryptos are being taken down. And I'm starting to hear some of this stuff. And that is clearly a misconception of what's actually happening. So we really have to get to the truth of what Bitcoin is and what it is not. Okay, so first of all, it's not a replacement for fiat money. I know this is the Bitcoin proponents really focus on this, that hey, this is going to be this replacement for the dollar, the euro, all these fiat currencies, and how great it is, and it's better than gold, et cetera, et cetera. But that is clearly, it's just not the case. So let's look at something here. Let's look at the St. Louis Fed. Okay, so we're going to run down our list of characteristics. So this is something you would learn in basic economics. What are the characteristics of money? Okay, and I do acknowledge that there's a difference between money and currency. And in this case, I would say Bitcoin is neither money nor currency. But let's go through it. One of the things is durability. Okay, so with respect to durability, I would say that Bitcoin does have durability, right? Once you have the keys and you have your Bitcoin, it's like, okay, fine, it's not going to wear out. You can have it stored on your USB drive or wherever you store it. That really isn't an issue. Portability, it is portable, right? I mean, the exchanging is kind of on the slow side, but you can portable. You can, move it around electronically, whatever. So that's fine. Divisibility, that's fine as well. It is divisible, just fractional Bitcoin, whatever, or other currencies that are related to it. Uniformity, that's also a Bitcoin is a Bitcoin. You don't care which particular one it is. That's all great. Now, here's where we start getting into trouble. Limited supply. Now, people will come out and say, hey, Bitcoin's got a limited supply, whatever it is, 22 million Bitcoins. That's all there's going to be. Well, this is not really true, because although Bitcoin in it of itself is limited, first of all, you had the forks to Bitcoin Cash, all that crap, which just created more supply of various coins. The reality is that, hey, look it, in terms of cryptos, there's more and more cryptos coming out every day, even despite the fact that they're all going to zero at this point, there's been just an infinite supply of Bitcoin. So when you look at crypto as a whole, there is no limit to the supply. I mean, anyone and their mother can come up with a Bitcoin and start trying to sell it. It does not meet this requirement at all. The other thing is acceptability. Now, here's the deal. It did start to gain some acceptability, but one of the problems that happened is that the volatility of it is so volatile, the price of it relative to other currencies, like relative to the dollar, has been so volatile that it's really hurt the acceptability. So it really doesn't really meet that. And because of the volatility, I mean, it was getting close. It was getting close where it was like, hey, stores and Tesla and different companies were going to accept Bitcoin for payment. But the reality of the situation is, due to the volatility, it's very difficult to do that. So in short, Bitcoin is not a replacement for fiat currency. And in reality, it never really could be. I mean, that's just what it is. So, what has happened to Bitcoin? In and of itself, what morphed into Bitcoin is, and now we're talking all cryptos. What ended up happening? What ended up happening? You start out with something where you have a crypto, and your crypto is your crypto. But then we have all these companies, and what's happening now? We have all these companies where you can basically get a yield on your crypto. How can that be? How can I take Ethereum? How can I take Bitcoin? How can I take some other stable coin or whatever? It doesn't even matter. How can I deposit that at a company, and that company says, hey, I'll give you 7% on your money. I'll give you 17% on your money. How and possibly can they do that? Well, the creative human mind has come up with a way of doing this, and it's called leverage. Okay. What has happened is, how do they do that? And I discussed this in one of my other videos based on the Meet Kevin video, how he was talking about Ethereum and staked Ethereum, how you could go take your Ethereum, turn it into Lido, get staked Ethereum, and then you can go borrow against that. So you can keep repeating this process to take in turn, your Ethereum. If you had $1 of Ethereum, maybe you could turn it into an equivalent of $10 of various crypto, earning a yield. And that's how you make money. And that's how these companies make money for you. I'm sure there's an infinite number of ways that they can, make money, but all of them are going to involve some way. If they're going to pay you 7% in a time where even now the 10-year yield is only 3%, how are they going to do that? They can't do it in a safe way. They have to take risk. And the risk that they're taking most likely is what? They're leveraging it up. Now, so this is just the effect of what companies and individuals do. They become creative in these financial realms, and they take any asset, any new asset that becomes financialized, and in this case, like crypto is already by its nature a financialized asset. They just take that and they start putting on their little creative caps and start coming up with ways to make money on it. And that's what's happened here. So the end result is that you've turned crypto, which in and of itself may have not had leverage. It may have not been speculative from the beginning, as speculative, into this thing where it's an incredibly speculative asset. So why is it a speculative asset? Look, at this point, who is really buying crypto? And even in the beginning, when you look at it, the whole driving force behind crypto, if we look here, is much of the run of crypto from, in particular, Bitcoin, looking at it from down in the $8,000, $10,000 range that drove it up to this 30,000, 60,000. This is just like any other time in any other place. It's just a financial bubble. It's just a speculative asset that money is pouring into. It poured into here, ramped the price up, and it was speculation. That's all it is. So Bitcoin is not an alternative currency. It's not a new way of anything. It's just another speculative asset, whether it be tech stocks in 2000, CDOs and mortgage-backed securities in the great financial crisis, or tulip bulbs back in the 1700s. It doesn't really matter. It's just another thing, hysteria, bunch of money goes into it, the price goes up, but it's unsustainable. And what happens in these cases are that leverage just gets ramped up to the point where any small drop in the value of that asset destroys the companies that are doing all the leveraging. And that's exactly the type of thing that we're seeing with Celsius preventing withdrawals. And now there's another company preventing withdrawals. I think it was Babel. And then we have all these hedge funds, crypto type hedge funds that are all having these problems. Why is this happening? It's happening because they just leverage this thing up, and you owe someone. The reason the price went up is because you owed someone. You took in someone's money, they bought crypto, they gave you the crypto, and you promised them a return. And to do that, you leveraged up to the max to do that. And then the value of that asset goes down even a little amount, there's no more principal left. So it is just a speculative asset. So this happens really throughout history. And we can go look at another chart here of the Fed rate, the Fed funds rate. So the Fed is controlling the price of money, but not all money. It's just the short-term interest rates. That's all they can control. And if you look at this chart and you see in the shaded regions, these are all recessions. And if you look at almost all these cases, you see that they cranked up in blue the Fed funds rate. As they crank it up to a point where they break it, cause a recession. Crank it up, break it, cause a recession. Here in the 80s, Volcker was really cranking on it. And the reason they're doing this, they're not doing it just for the fun of it. They're doing it because at these times, there was inflation. And so they're trying to get, dampen the inflation. And the only way that they can do that, so inflation is, prices going up. The reason prices go up because at some point you've printed too much money, and too much money is chasing too few goods. And then therefore that is a sign of demand. How do you reduce the inflation? Well, you have to reduce the demand. So you have to slow the economy down and preferably knock it into recession. So that's exactly what the Fed is doing. So the point is that every time they do this, whatever the speculative asset was at the time, whatever the assets that really have very little underlying value, those get killed. So you go back to the tech bubble, you had all these companies, these internet companies that were making no money. I don't know, pets.com, whatever. And they just had eyeballs, but they were horrible business models, not making any money. And they were burning through massive amounts of cash. And the only reason they could do that, so that was going to be in the 90s, right? I was back here in the 90s, building up to the recession in the 2000. Okay. So there's two aspects to this. First of all, those speculative assets would not have gone up in value that much without the Fed's easy money. Simple fact is the tech bubble was caused by the Fed's easy money. They held rates at some level for a long time, and that helped spur that speculative bubble. When you go back in the great financial crisis, it was very plain there. They kept interest rates low for so long, going up to '08 here, they had done all this financial engineering. They'd kept rates low. And the result is you have all this speculative things going on. In that case, it went into mortgage-backed securities and all the financial assets there. And at some point, the Fed sees the inflation and they go and they have to like slow things down. And then because there's so much margin and so much leverage built into the system, it just like a little move breaks things. So that's where we're at now. So there isn't some grand conspiracy to take out cryptos. It's just that the diehard believers in Bitcoin and crypto who thought this was a new form of money, this was going to change the world in a new way of doing things, they didn't realize that their crypto became a speculative asset. Now, the moment you could take your money and lend out your crypto and get a 7% return, 10% return, you should have immediately known that your crypto became a speculative asset, because at that time there's no possible way for them to do that in a risk-free manner when interest rates are at 2%. So at that point, you knew it was a speculative asset. And at that point, when the Fed starts raising interest rates, forget it. It's done. Even when the Fed is threatening to raise interest rates, even when liquidity is backing down, all these things are happening. It's going to take out all the speculative assets. So hence, this is what you get. Now, what's really interesting in many ways, Bitcoin took out itself. I mean, obviously this run here is rather amazing, huge run, and it just unsustainable, getting to 60,000, just unsustainable levels. But then it fought back again, got up a little higher, 66,000. But what's happening to get these prices up here is you need the leverage. You need people like leveraging their house, taking out loans to buy crypto at these kind of prices. They're so expensive. And then you need them. So you need, people being like, look, I'm taking every dime I have and pouring it into crypto. And then what they're doing is they're taking the crypto and they're lending it out so they can get 17% interest on it. And then the people that are trying to give them the 17% interest, they're leveraging it up and up and up and up. So in reality, this thing already broke before the Fed started. I mean, the Fed has just started in here, right? The Fed's over here and starting to raise interest rates over here. And this thing is already imploded. But there's several things to keep in mind. The Fed talked about it for some time. So they've been talking about it. So they do have the bully pulpit. They do, when they talk about they're going to do something, and that can send, fear through people and stuff. And that can help get it going. So in the end, the truth about Bitcoin is that it's not a replacement for fiat currencies. It is a speculative asset. It's going to effectively zero. The whole crypto thing that all these people believed in, they loved, it's just a fad. That's all it is. It's just a fad. Sorry about that. That's all for this one.